we were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. This podcast has been so much fun because we're helping real estate investors and real estate educators be more successful. So if you're an investor or you're educating investors, this is the podcast for you. I know you're going to love this episode. Leave us a 5-star review and share this with a friend. You have no idea how much that actually helps us if you would do that. Today, we have the perfect guest for this podcast, Trevor Oldham. Did I say that right?
Oldham? Yeah, that was perfect.
Oldham? Yeah. So Trevor, you've been in the podcasting world since 2017. So I'm really excited to get to know you a little bit better today. And I'm hoping I could learn something selfishly. So you've been doing the podcast, you're a real estate investor, been doing the podcasting thing for a while, and you found a need, right? A niche. You like the real estate investor community, the world needs to get the message out there. We need to help more real estate investors get the message out there by podcast guesting. So you started podcasting in 2017, which I was actually a client of for a little while. I don't know if you knew that. And you've helped, was a lot, 400 professionals book 6,500 episodes, and it's probably even more than that now. So, man, welcome to the show.
Yeah, thank you. Super excited to be here and excited to share some value with your audience today.
All right, well, let's get into it because you are a real estate investor also. And that's actually exactly what we're looking for here. So why don't you take me back? I know you've done some syndication deals. That's all I know about you really is passive investing. So take me back. Why real estate?
Yeah, I think for me, it was almost like the cliche, I'm running the podcasting business and I enjoy the podcasting business, but I realized I don't want to be doing it for 20 or 30 years. Don't get me wrong. I enjoy it and I still want new clients and different things like that. But I was like, what's a way that I can diversify my income? And, I'd gone out and I'd been investing before in 401k IRAs, your standard products that are out there. I was like, but wait a second, I don't have to be at 59 and a half to take any of my money out of that. I'm 27 right now. So I'm looking like basically like 33 years is how long I'm going to have to wait. I was like, well, what if I want to retire, let's just say earlier, 45, 50, but I have all my money locked up in these financial products where if I want to take an early distribution, you get hit with a ton of penalties and taxes and different things like that. So I was like, what's the way that I can start generating cash flow outside of those investment offerings? And that's where I really stumbled along the passive investing route. And then when I started to do the math a little bit more, I was like, wait a second, hypothetically, if I invest in real estate, I could double my money in 5 years, where maybe in the stock market, I double it in 7 years, where I'm not looking to hit a home run on every single investment, just a standard 2x equity multiple over 5 years. And I think that really opened up my eyes. And then I was like, okay, well, I don't want to do this on my own. I don't want to deal with tenants and all the headaches and different things like that. That's just not my personality. And then that took me down the passive investing route. And that just, really broadened my horizon to all the different niches within the real estate space that you could really invest in. I was even talking to a gentleman earlier today, and he was saying he not him himself, but he knows of someone that passively invests in rodeo bulls. And they make, it's like a 50K minimum investment and they make great returns on it. So, I mean, that might be a little bit more than what I would want to chew off. I don't know enough about rodeo bulls or anything like that, but there's just so many different passive investments you can make, whether you're looking for cash flow, whether you're looking for more of your equity play. But yeah, that's really why I got into it. I just wanted to build some of that cash flow stream. And really, when I was looking at it, and even this year when I was going through my financial goals, I realized, hey, if I just invest 50K a year and get an 8% return, just a nice standard 8% return, not looking to knock it out of the ballpark, I'll have enough cash flow coming in from my investments to just cover my bare expenses within 7 years. If I want to go out to dinner, if I want to go on vacation, I'm going to need a little bit more than that. But it helped me put it into perspective. Like, oh, by the time I'm 34, these real estate deals, they could be covering my cash flow, just my bare minimum expenses. And I think my expenses will go down. Our daughter's in daycare right now, so I anticipate she won't be in daycare in 7 years, and that'll go down a little bit. But yeah, it just really opened up my eyes that there's different areas where I can invest and generate a return now. And I don't have it in like a self-directed IRA or a solo 401k. I just put it right into my high yield savings account. And I just, every time I get a distribution, I just put it back into this high yield savings account and use that to fund my next investment. That way, if I ever wanted to, sell my company, if I wanted to just do something different, maybe I wanted to work less hours, I would have that cash flow coming in down the road where I wouldn't be locked up in one of those other products that's out there.
Oh, that's such a good message. I want to get into the timing of this, but before I do that, I think you know him, Scott Trench, the CEO of Bigger
Mhm.
Pockets. So Bigger Pockets is located here in Denver, where I'm at, and so him and we've interacted multiple times, and some of the things he says is just like, holy cow, it's such a different way to think. One of the things he says, and he actually wrote it in his book as well, but if you want to slow your retirement down, Trevor, he says, invest it in a 401k or IRA
Mhm.
for the exact reason that you're saying. Now, that's a super controversial comment, right?
Mhm.
But you're saying you could actually increase the speed to retirement by not investing through that vehicle, something that you could get access to more quickly, and then put that into real estate.
Yeah, and that's spot on. And I think it might have been Chad Carson. I don't know if he's one of the Bigger Pockets personalities, but I know he does a lot of writing for them and has a successful book. And he made an interesting point where your 401k and your IRA, that's money that you use to retire after 60, but you want to have that income stream coming before 60. So when I heard that, that really flipped my mindset. So for me, like this year, I went out and I maxed out my Roth IRA. That's the max investing that I'm going to be doing in the stock market. The other 85% I'm going to be putting it into real estate because yeah, it might be nice to have that little additional cushion where I have that tax-free money if I need it at 60. Hopefully I don't need it. Hopefully the real estate investments
Yeah.
will do it, but it is, it definitely will get a better return in real estate. I mean, I hope I vet my sponsors correctly and I like their deals and different things like that. There's no guarantee. I mean, there's no guarantee in the stock market as well, but yeah, that's really what I liked about it was just like I could get access to my money quicker and potentially shave years off my retirement age. I think it's a common cliche you see folks talking, oh, I could invest in real estate and retire in a year or two. Well, maybe if you're the sole operator of of the
Yeah.
apartment complex, but it's still gonna take maybe even I know I mentioned 7 years for myself, but I probably would still want to be consistently investing and working at least 15 years to have a comfortable maybe 6 or 7 thousand, 8,000 a month coming in, maybe try to get that to 10,000 a month where I'm like, okay, my expenses are 3,000 a month. I have a $7,000 cushion there if I want to take a vacation, if I want to go do certain things. So it's definitely a longer term play, but when you consider investing in your 401k for 35 years or 40 years,
Yeah.
it sounds a lot better.
I totally agree with you. The real estate business, in my opinion, and I say this a lot, it's the one vehicle that I know of that will make you rich, and I could promise you that it will do it. It just takes time. It's going to be a
Mhm.
slow grind. It's a process. Unless you buy an apartment building and Tesla moves in, across the street, you're not going to get rich in a couple of years. So you
Mhm.
make a very good point here. Now let me get back to the timing of this. So you don't own any actual like single family rental properties or small apartments. It's just all
Yeah,
limited
just all
partnership investments, right?
yep, just all passive.
Okay. When was that first when was
So I
that
made
first
that
investment made?
yeah, the first one was in October 22.
Okay, so you're like on the tail end of COVID, huh? When everything was going a little nutty.
Yep, exactly.
And then you've done four.
Yep, 4 total.
Okay. And how are they going?
For the most part, they're going good. I mean, initially I went conservative, and what I mean by that, I did triple net lease. So for those listening, you basically the tenant pays taxes, insurance, maintenance, corporate grade A tenants, AutoZone, Dollar General. Pretty safe investment. I'm getting 7% right now. Anticipate getting 8 to 9%
It's
on
good.
that, and that's a nice monthly distribution on that one. I invested in a debt fund. I like that one, so I put in they have like if you put in 25K or over, you get bonus shares. So long story short, I put in the 25K, that's 9.2%, and that's going to be paid out monthly. So I like those. Those ones are pretty stable for the most part. I mean, there's not a whole lot to them. I mean, I like the debt fund just from being first position lien holder. If the person doesn't pay their mortgage, we just go in and we take the property from not me personally, but the company that I invest when they go in and take the property. So I like that aspect of it. And then the other two, multifamily deal, that's always the interesting one because multifamily has been really up in the air in the last little while. I felt as though I got in with a good operator. It hasn't been crushing it. It's a value add deal. We've gotten like 5% annual return, so nothing like to knock it out of the park. But again, it's value add. I expect it to increase over time, but I understand if it's going to take a little bit longer, just given everything that's happened. And then I sell storage development deal. That one's interesting to me because the first two I got in pure cash flow. This one just pure equity play. where there's a potential to 3x equity multiple over 5 years. But I've been in the deal coming up on, I invested in February of 23, so over a year now. So no distributions yet. Won't get the distribution until I think January 2025, but then get the return of principal a year after that. But I like that deal. It made sense going in for me because it was like 250% below market rents on the storage unit. So like all they had to do was come in and raise rents. So I know like now we're up to market rents. It's cash flowing perfectly. It just happened to be these units had a ton of land on them that was just not developed. So that's what they're doing. They're making a climate controlled facility. So I like that aspect of it. But yeah, overall they've been doing good. I think I just do a really hopefully do a good job vetting operators and sponsors. I like to ask them a lot of questions. I'll do like background checks on them, talk to previous investors, just different things like that. Cause I mean, 50K if I'm investing with you. I mean, that's like a year of me working to save up that capital to invest with you. I don't want to spend a year of my life working and running my company all for it to invest it and then get 100% loss of capital. So I think I just try to be selective in one of the investments. I don't want to chew off an IRR that's too great. I mean, I know that self-storage development deal is a little more risky, but it was just there. All they had to do was just raise rents and we were going to be making money, let alone if the other aspect of it of the building the new climate controlled storage unit. So I like them. I think going forward, I probably want to get into another cash flow opportunity. Just I don't know. I like it. I'm hoping the people I invested in the triple net lease will have another offering. I like it. Consistent distributions. I got into that and the mortgage note fund both in October 22, and I mean it's nice. It's just money that comes in every single month. There's been no pause in distributions. There's you just hear of a lot of folks in the multifamily space where they have that the pause. You hopefully sometimes they have a capital call. Sometimes they might have, depending on what happened with the operator, 100% loss of capital, or maybe they got moved down on the capital stack. So those are those things I'm a little leery about. So if I'm working with the company and they're doing a good job, I'd double down on my investment with them.
Yeah, I feel like I've experienced everything you just described. So I do a lot of passive investing in other people's projects also. And yeah, capital calls and moving from, an equity position into a debt or
Mhm.
sliding down it to allow for a preferred position to come in front of you to fund. All of that is true. All of that happens. I love the debt funds also. That's what our company does. So
Mhm.
we're between 9 and 10% also. So I think every debt
Yep.
fund's similar. We've been doing it for almost 16 years now, if you could
Oh
believe it.
wow.
So yeah, we really do like that because you're in the first position. It's the safest
Mhm.
investment in the capital stack.
Yep,
So
exactly.
I agree with you. And it's monthly distributions from day one. And you're right, it
Mhm.
doesn't stop. So that's great. I wonder if we know some of the same, I bet you we know a lot of the same people.
Oh yeah, I'm sure
When
we
you,
do.
you start talking about this self-storage deal, I'm like, I wonder if I looked at that one. That's pretty funny. Okay, so what kind of advice would you give to a real estate investor that's maybe newer, younger, like yourself, that wants to find some type of passive investment that will double in 5 years, as you describe?
Yeah, I found for me, it was basically threefold. So one, it was using LinkedIn and finding networking groups. So there's tons of networking groups on LinkedIn. You kind of just gotta search for them. You gotta connect with people on LinkedIn. So that was a big aspect for me. Another aspect was using bigger pockets, just going on bigger pockets, seeing what people are talking about syndications, and that was helpful for learning. I mean, in the beginning, I was like, what's the difference between a 506C deal and a 506B deal, non-accredited versus accredited? And obviously, as so for me, I'm a non-accredited investor, so it's going to take a little bit more legwork for me to go out and find a deal where I can't be marketed to just per SEC guidelines. So understanding I have to be the one to approach the operator and start that conversation. They can't be approaching me just again based on SEC guidelines. So, learning that aspect of it. But really what helped me was I joined a community called Left Field Investors. And it was through the LFI group where basically everyone in the group is a passive investor and they'll talk about all these different sponsors. So there's always people talking about, hey, have you invested with this sponsor? Oh yeah, I've invested with them. Here's my results. Or I talked to their IR guy, investor relations person. Here's what I liked about them. Here's what I didn't like about them. And I don't know how many members there are in the group, but I mean, anytime I'm interested in investing with a particular sponsor, I'll just go through, hey, I talked to these guys. Anyone have any experience investing with them? And I mean, they have probably 150, 250 sponsors, that people have talked about in it. So and early on, I was just going through and just reading up all the different sponsors on all the different operators and then just scheduling calls with them. I think I spoke to about 25 different sponsors and operators before I pulled the trigger. Probably spoke to them for I think 3 or 4 months before I finally felt comfortable, finally had an understanding, because I talked to so many operators and sponsors, and they're like, we underwrite conservatively, just different things like
They all
that.
say that.
Yeah, exactly. So I'm like, what does that actually mean? So I went out and I bought like an underwriting course, and learned how to do underwriting myself. I wouldn't say that it's perfect, but just enough to know like what the pro forma that they're sharing with me, does it actually make sense based on.
Yeah.
I wanted to know, like, if I'm again putting 50K into a deal, like I want to at least have a minimal knowledge of like, yes, this deal actually pencils out, and you're not like fudging some of the numbers to make the investment return look better. But yeah, for me, it was just talking to different sponsors. I mean, over time, you get a feel. Yeah, I'd want to invest with this person. No, this person, they were like a used car salesman. They were pushing me too hard on their deal. And really, that just comes with experience. And over time, you just get a feel for what sponsors. And yeah, I was like super uncomfortable in the beginning, because the sponsor would be like, hey, like, what questions do you have? I'm like, I don't know. Like, what questions should I be asking you?
Yeah, exactly.
That granular. And then over time, you start to get a feel like, okay, let me ask, have I gone full cycle? Have they ever had a capital call? Can I speak to another one of their investors? Just different things like that. You pick it up over time, but like anything, it's just putting yourself out there. And for me, I challenge myself. Okay, I could say I want to passively invest in real estate, but let's put a goal to this timeline. So for me, it was like I want to passively invest by, I think it was like January 21, and I started looking into it in like or not January of it was January of 23, and I started looking into it in like June of 22. So I gave myself a long runway. Then obviously I got into in October 22, so a little bit quicker. But I forced myself to have that deadline, because I feel like so many people would say, "Oh, I want to invest in real estate," but then they never do because they don't have that goal. And then for me, I was talking to this individual I met in a networking group, and he was on top of me because of that. Where he was like, you have to do it, because if you don't do it now, you're gonna keep putting it off." And he wasn't a syndicator, he was just a passive investor. So for him, he was like, I challenge you to do this by the end of the year. And that was just important for me, because having that goal, I didn't want to not I didn't want to not do it, because he would check in like every like 3 or 4 weeks or so. Hey, how's it going? Who you've been talking to? Just want to check in. And I just met him again through a networking group that I'd found on LinkedIn, just connecting with other real estate investors.
Oh, that's interesting. So make a goal and you have a timeline. So whether you're investing passively in someone else's project, like you're describing here, or you just want to go out and buy a rental, I totally agree.
Mhm.
You got to eventually pull the trigger, and you're going to make some mistakes, right? I mean,
Oh yeah,
there's
exactly.
of course, and so you just prepare for that and know that you're going to learn from that mistake. But gosh darn, make the mistake, go for it. Now, what you're doing here, other than maybe that debt fund, everything else is like a single purpose, like single asset. Everything that I heard you just say, Trevor, was when you're going through the underwriting process, you're underwriting the sponsor. I didn't hear
Mhm.
much in there about how do you look at the deal itself. So what's more important, underwriting a sponsor, or is the project they're even getting into any good?
Yeah, so I honestly think of it like horse racing, where I'd rather bet on the jockey and then bet on the horse. So I look at an operator's track record. I know I can look at their deal. I can run some of the numbers on my own end, but I don't have time to sit there and crunch through the numbers for an hour or two or three or four to see how the deal works out. So I want to have the trust in the operator and the sponsor that they know what they're doing. So again, that's by me just having like a gut check with them, having a conversation with them. And like as an example, I had a call with a company a week ago, and the guy showed up 10 minutes late to the call. I'm like, well, I haven't even invested with you, so
Yeah,
that's a
exactly.
red flag. So that's like little things like that. Like, have you gone full cycle? When did you go full cycle? So if you went full cycle in 21, 22, but what are you expecting now? Because it's hard to trust anything that happened 2 years ago, because it was
Yep.
like I could have gone out and bought an apartment complex, did a slight value add to it, and maybe double people's money in 12 to 18 months. Like, what are you doing now? So yeah, it's just really, I think that's part of it. Doing background checks has been very beneficial. So I'll tell the sponsor, hey, we're running a background check, anything I should be aware of. Sometimes they might tell me something like, oh, I had a tax lien on this property because I was going through a divorce, and it was going back and forth. So it's like, okay, like that's good to know. And then on the flip side, you have this gentleman where he doesn't tell me he has a bankruptcy on his credit report from like happened like 5 years ago. I'm like, well, that's a pretty big red
Yeah.
flag right there, where it's it's not like a speeding ticket where you're like, oh yeah, I forgot that I got that. It's a pretty life-changing event when you have bankruptcy. So different things like that. But yeah, that's my really initial thing is I'll talk to the sponsor, see how I like them, see how I interact with them. And then if I like what they have to say, then I'll dive a little bit deeper into their deal. But again, being a passive investor, you have to have that trust with the person. I like what you have to say, I like your offerings, let me put that money with you. And it sounds like you're hoping that they do well, but I mean, that's why you do all that upfront legwork. But yeah, for me, I want to make sure the person I'm investing with, I feel comfortable investing with them. That's really the most important for me, I would say.
No, that's fantastic. This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. Shift gears here, Trevor. Talk to me about podcasting. So what's the benefit of you being a guest on this podcast right now?
Yeah, I'd say for me, it's just really one, like building brand awareness. It could be potentially generating leads for my company. So if someone hears me in your audience and like, oh, I like Trevor, I like what he has to say. Oh, I want to get booked on podcasts, but I had no idea how to do it. Let me go check out Trevor's company. So there's that aspect of it. There's the recognition. And then there's also the aspect of it where, let's say, Kevin, we're talking 30 minutes today. I can take the recording. Hopefully you'll give me the recording. I can take it and I can have my team take it. I never had anyone say no. I can take the recording and take it and create 5 to 7 social media clips from it and put it out there on social media. So now I get the brand recognition by associating myself with you. I get the added benefit of potentially getting the leads from your podcast if someone hears me and they like what I have to say. You have the social media aspect of it where I could take the interview and splice it up and put it out there on LinkedIn. I find that's a great source for us when it comes to leads for our company. And then outside of that, you get the SEO benefit for it, where a lot of the times podcast hosts, they'll link back to your website within like a quick little recap of the episode that they had done with the guest. So some hosts do that, some hosts don't do that. But if they do that, you get that nice little SEO backlink. Long story short, that'll just help. Google likes more backlinks you have, the better you're going to rank, the higher you rank, more people are going to click on your site. So you get that little aspect of it as well. So there's a couple of those different things. And then two, I mean, I get to do it from the comfort of my home. When we hop off the interview, I'm done. I'm not at a conference. I'm not on a speaking panel or anything like that. I get to show up for, again, 30, 45 minutes, have a nice conversation. And then that's the end of it. I don't even have to leave my house. I can, literally do it from the comfort of my home.
One of the biggest benefits I've seen from both guesting and being a host is just getting to know the people that you're talking to. Like you and I never spoke before. And here we are in an intimate 30 to 45 minute conversation, getting to know each other. Right. So and then I ends up turning into deals a lot of the time. So that's been just getting to know the host is a huge benefit that I don't think you mentioned there that I got out of guesting. But everything else you said, I 100% agree with. So as a podcast guest, what are some pieces of advice? Like what can we learn from you?
So I would say one, I find that a lot of people overstep this, and it's very simple. Just get a good quality podcast microphone. You can go on Amazon, you can get a nice Blue Yeti mic. It might run you $130. You just want to have a nice quality microphone. Outside of that, I would say if you're uncomfortable going on podcasts and you just never done it before, what was helpful for me, and it's funny because I run a podcast booking agency, even then I was still a little uncomfortable at times going on podcasts, but I did join Toastmasters. So just did that public speaking just to get better at that. I found that was very helpful. And then early on in the business, when I was going out there and promoting our company on podcasts and talking about the benefits of podcast guesting, I would just start on smaller shows that have maybe 5 or 10 episodes. They've been out for a month or two, and really just trying to get on those shows and guest, just because I found for me personally, it took about 5 to 10 interviews for me to get comfortable just going through my story, figuring out what I'm going to say, where now when, like, Kevin, you asked me a question, I don't even have to really think about it. I just know what I'm going to say because I've gone over it so many different times, where early on I would be like, okay, let me think about it, where that's not really what you want. on a podcast, yeah, you can definitely pause from time to time, but you just want to get good at it because I found for me, if I was going to go on a large podcast early on in the beginning and I didn't have my story down, I wasn't polished. Not to say you have to be polished, but let's just say you weren't doing a very good job. You had a lot of ums and pauses and different things like that. Maybe the audience doesn't resonate with you as much. And I know for me, I went on a larger podcast early on, and I look back now, kind of regretting it. I was like, I wish I would have waited a little longer, had our ideal target audience. I just wasn't that comfortable yet being a podcast guest, and that just comes with experience. And then the last piece of advice I'd be have some sort of lead magnet set up on your website, whether it's like an ebook that pops up, whether they can go book a discovery call with you. I find too many folks they'll have a website, but there's nowhere to get in contact with the individual, no way to really monetize the interview. And then you have like a back end funnel system, which I look at podcasting as almost like one part of the marketing strategy where if someone comes to you and listens to you on a podcast, maybe they go to your website, but they're not ready to, let's say, Kevin, invest with your company or work with your company. And then for me, they're not ready to work with my company. But we still have to figure out a way to interact with them per se. So maybe we have an ebook where they can sign up and they're added to our email list. And then we have an opt-in funnel where it goes out, say, every single day for 7 days, they get an email from our company talking about, hey, here's how to promote your podcast episode. Here are the benefits of being a podcast guest. Just dripping them with helpful content. And then you could also do like retargeting ads, which is pretty cool. I'm sure you've been on a website and it follows you all around the internet. You can do it that way. And something we started using recently, which has been cool, is a tool called Opt-in Monster. And what that does is that's what we use for our lead magnet and our pop-ups. But we could set it up where if you have previously visited our website, it'll show you a different pop-up than if you're coming to our website for the first time. So now if I know you've been on our website a second time, not to be like creepy, but it'll be like, hey, I noticed you're back on our website again. Like, it seems like you're really interested in us. Do you want to book a call? Something, it doesn't sound exactly like that. That might be pushing too hard, but something similar like that. So you just want to make sure you have some of those funnels and those strategies set up on the back end, because again, people can hear you on a podcast, but it might be a little bit longer. It could be 3, 6, even 12 months before they're ready to work with you. And you just want to make sure you're capturing that, because if they come to your website the first time and leave, that could be the end of that. And they just forget about you or your company.
Yeah. So it sounds like what you're saying here is that you should probably start with a goal, like an end in mind before you start guesting. And if it's to generate leads for raising capital, or is it real estate deals, leads for that, whatever it is, mortgages, if you're a mortgage broker, and then have a good call to action.
Yep, that's spot on.
Yeah. And you went even further to get them into some kind of a drip campaign or some way to keep in touch with them almost automatically, right? It's like automation. So I love that. That's exactly right. And same thing with when I decided to even start this podcast, like what is the goal of it? And let's target and build everything around that one specific goal. It's not just to have fun and get to know cool people, although that's definitely a piece of it. But there's a very specific goal in mind, right?
Yep, exactly.
All right. So tell me a story, Trevor, because you do the podcast booking. So tell me a success story. I'm dying to hear this. So one of your clients that had a huge win working with your company.
Yeah, I would say one of our clients, we worked with them about the course of a year, booked him on 20 shows, and he ended up raising, it had to be on at least $1 million. He didn't tell us the exact number. All I know is he had 25 new investors that worked with him, and his minimum investment was $50K. So just to make it simple, 20 times $50K, not even including the extra 5, that's at least $1 million, not including if someone put in $100K. And that was, for me, that was probably about 3 or 4 years into the business. So prior to that, we were working in a lot of different niches outside of real estate. And I was like, this is crazy. So about 3 years in, I was like, I'm just going to work with one specific niche. And I was like, the clients that we're working with, they're continuing to work with us on average about a year or so. I'm like, they must be seeing some value out of it, or they wouldn't be working with us at that point. But I was like, how well does it actually work? Because it's not as easy to track as you could think, like a Facebook ad or a Google ad where you can set up pixel tracking and conversion, where it's a little bit easier to track. Podcasting, it's a little bit harder to track from time to time. So that really just opened up my eyes. I was like, oh wow, this could actually help more investors. And not that I felt like I was like faking it, but I was like, I'm promoting this, I'm saying how this is helping investors, but but does it actually help investors per se? So it almost like gave me that confirmation, like, oh, like, okay, this actually does work. My philosophy and what I was thinking about works. So yeah, that was probably our biggest win to date for a client, was just again booking him on those 20 shows and him raising over $1 million from it, which was pretty cool.
Did you get him on any of the big shows like Bigger Pockets or Best Ever or anything like that?
Yeah, definitely like best ever. I can't remember if we got him on Bigger Pockets or not, but yeah, definitely some of those bigger shows that were out
Okay.
there. That
Oh, that's
definitely,
great.
yeah, that definitely helps as well.
Congrats, man.
Yeah, thank you.
Yeah, I get leads like totally random. Oh, I heard you on a podcast a year ago, or that you recorded a year. I mean, it takes time.
Mhm.
So you have to be very patient with it. But I do think podcasting is a good way to market the company. Now you bring up a good point. I love marketing. You bring up a good point about tracking.
Mhm.
How, I haven't figured this out, man. How do you track that?
Yeah, so I would say one way that you could track it, or I guess there's two different ways you could go about it, depending on how much time you have. So one would be like if someone's booking a call with you, you just say, "How did you hear about us?" You could put like Google search, you could put social media, podcast. You can make it required or not required, depending on if you want to. It just depends if you want to do that or not for your own. So there's that aspect of it. Another one, you could create a landing page for each interview that you do, and you could create like a tracking link. So like I can see like, okay, if someone came to this it's a little bit more work into it, where you have to set up a specific landing page for each show, and then from there you can basically set it up so people go to that specific landing page, they book a call, and you can track and see like which interview that they had come through. Honestly, so that's one area. I find for me, honestly, that's a ton of work. And I mean, I don't mind doing it from time to time, but it's more for me when I'm like, when we're all of a sudden let's just say it's a random day of the month, it's a Friday, and I got 10 new people book a call with me today, and we didn't change anything in our marketing. Well, that's going to be an outlier. So I'll go online and I'll use a tool to see like, the only thing that would have been different would be, did a podcast interview go live today? So I find that that helps out. If you're on a call, I'll be like, hey, like, how did you hear about our company, just out of curiosity? And then they'll tell us, oh, I heard you on so and so's podcast. And like you mentioned, there'll be a podcast where they'll be like, oh, I heard about your company on this podcast. I'm like, I don't even remember doing that
Yeah,
podcast.
exactly. That totally
It's
happens.
been so long. So yeah, those are a couple of the different ways. Honestly, I find just engaging that conversation with the potential client or investor on the when you're having that conversation with them, and it's such an easy intro conversation. Hey, like, awesome to talk to you today. Like, just out of curiosity, how did you hear about our company? And it just starts off that conversation, and they can go into it from there. I find that that usually works better than anything else, because I could give you a landing page, but a lot of times people just go directly to my website anyway. So
Totally.
it kind of defeats the purpose of me setting up the landing page as much as I wish that it would work.
So you might find this interesting. I started investing a little over 2 decades ago, so like 22 years ago. And back then, we didn't have all these tools back then, right? And so tracking was far easier. So when I was buying houses, I would market directly to sellers. I'd go into their living room and I would negotiate to buy their house, right? But I wanted to know where every lead came from, and I want to know what it cost me to get that lead. So I had it down to a freaking science. That's almost impossible now. And in fact, a business coach of mine told me to stop stressing out about that level of tracking. His suggestion, I'm curious what you think, Trevor. His suggestion is it's not one individual, medium anymore. Now they're hearing you here, they're seeing a newsletter, they're seeing you over here, they're hearing that on this podcast over here. It's all of those combined that got them to phone you or call you. It's not just that one podcast you did. So it's like building a following instead of a lead. So what do you think about that?
Yeah, I like that. I think definitely like that. I think for me, just trying to make it like just more out of curiosity where some of the leads are coming from. So like I'll set up
That's me.
and just
That's totally me.
yeah, and just so I basically have like 3 calendars set up. So I'll have one set up if they just come directly from our website. So it's easy to tell. Then I'm curious if they come from LinkedIn. I just have a LinkedIn specific calendar and then an email specific calendar. So I just change up like the URL. So it'd be like, we use Calendly. So it'd be like calendly.com/LinkedIn, calendly.com/email, just more out of curiosity to see, okay, who's booking directly on our website, and then who's booking directly from LinkedIn, who's booking directly from our email. So, and it's interesting. I like doing the email one because I can see like basically when someone signed up for our email list versus when they book the call. And it's just more out of curiosity to me, because I mean, we'll have people on our email list 2 years that were just getting started in real estate. So now they have, say, 50 million in assets, And now they're like, okay, maybe I want to try to go on a few podcasts 2 years later, and they've been just on our email list, getting like weekly updates here and there. So I like to just, I wouldn't say I over obsess over it. I'm more just like curious out of it of
Yeah.
what's going on. I think I spend a lot of time on LinkedIn content and we drive a ton of leads from it. So I think it's more like I just want to make sure if I'm spending a ton of time on it that we're getting some leads from it. But yeah, like you mentioned, I don't try to over obsess. It's more like out of curiosity than everything, than instead of going down deep into the metrics and the numbers.
Yeah, he keeps telling me, he being my business coach, like, stop worrying about it. But I can't, Trevor, I can't. I want to know where the leads are coming from. So what we did is we wrote it's just a special report, pretty simple, but it's actually, I'm very proud of it, but it's a simple special report that we give away for free. So I share that URL anytime I'm guesting on someone's. So if they go to that and download that report, I know it came from a podcast. I don't know which one, but at least we have narrowed it down that way. And then obviously they enter into a campaign. So we start hitting them. So with that said, we're running out of time here, man. What other piece of advice, final words of wisdom from the podcasting expert himself?
Yeah, I would say the biggest thing is just to start. I mean, I know I mentioned public speaking, but I found that was the biggest hindrance to me. And I had been running the company for probably about 2 years. And it's funny because I'm running this podcast booking agency where we're booking our clients on podcasts, yet I was almost like nervous and timid for myself to go on podcasts. I knew, and it was like backwards. It was like you'd think like I would want to go on podcasts all the time, and I really just had to push myself out there. It was super uncomfortable the first couple of times. I had a host tell me like, "Oh, your lighting's terrible," or "You need a better, you need a better mic." I mean, that kind of hurts a little bit, but you take it as constructive feedback because if you're a host, you want to make sure you're producing the episode, you have a good quality guest, and they have the bare essentials coming on to your show. So I would say just to go out there and just start, whether you've been on a few podcasts, whether you're just starting out there. It's totally, I love it because one, I could just talk to hosts like yourself, Kevin. I mean, that's like the best aspect of it, where I come on just to get to provide value. It's not like a sales call where it's like more rigid and tight. And not that it's like that, but it's just a different atmosphere where I feel like I can just be way more laid back on a podcast than I am when I'm selling a potential client, or if you're thinking about if you're raising capital. It's just gonna be a little more rigid if you're talking to a potential investor than if it's like a laid back conversation just hanging out. So I really like that aspect of it. So I'd say again, if you're a little timid, just put yourself out there. It's really going to be worth it in the end.
I love this advice. And I 100% agree with you. It's just a conversation. It's actually a lot of fun. Now, you do want your goal and your call to action. So have that in your mind, maybe a little sticky note. But with that said, it's just a conversation about your own self. Who doesn't like to talk about their own self, right?
Yep, exactly.
It's a lot of fun. All right, man, I'm going to wrap it up with my notes here. So I'm going to share with you and the listener what I got out of this episode having you on. So thank you so much for your time. And then you tell me if I missed anything. How's that sound?
That sounds perfect.
So if you're a newer investor, you said you got to find networking groups. That's the very first thing that you said. So it's really about building relationships. And you continued with that by saying, look at Bigger Pockets, try to interact on Bigger Pockets, biggerpockets.com. You joined a group called Left Field Investors, and it's a passive investor group so that you could help do some diligence on the sponsors. Make a goal. I love this one. And you specifically said a timeline goal. And then always bet on the jockey. The jockey's better than the horse, right? Or basically what you're saying is underwrite the sponsor more than the time you spend on the property itself. Then we got into podcasting. So some advice for podcasters or new podcasters. Get a good microphone, join Toastmasters. You said that a couple of times. Start with the smaller shows to build some comfort and some confidence, some skill. Have a good call to action, have a back end. What are you trying to sell? What is your goal? And then you mentioned Opt-in Monster, which I've never heard of before. So I'm going to check that out. How did I do, Trevor?
That was perfect. That was spot on.
All right, man. Well, if there's any final words, tell us how we get a hold of you.
Yeah, most certainly. So if they're interested in our company, they can go to our website, podcastingyou.com. You can go from there. You can book a call with our company, or basically when you hop on, like a nice ebook pop up. It'll be how to master podcast guesting. You can go and download that. No secrets here. You'll be in our drip campaign. But it's all helpful information as I went over it in the podcast. But if they want to get in touch with me personally, they can just connect with me on LinkedIn. That's just my name, Trevor Oldham, and happy to have any conversation, whether it's about podcast guesting or whether it's just, hey, I want to get started passively investing in real estate and looking for some advice. Happy to do that as well. And again, happy to connect on LinkedIn.
Yeah, and Trevor, I wouldn't have brought you onto the show if I didn't have a good experience with your company. So I will say that
Thank you.
it was a good experience. So thank you so much for your time. It's hugely valuable to me, hugely valuable to our listener to have you here for 30, 40 minutes. So I appreciate you. And for the listener, thank you so much for tuning in. We could not do this without you. What we want to do is help more real estate investors and educators just like you. We could do that if you give us a quick 5-star review. And I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.